How's everybody doing? Boy, I'm having some technical difficulties here. Just a second as we get started. Um, we are stuck. Let me close the platform, and it's not going to let me do that either. Boy, I don't know what in the heck happened. I got too many things going on in the background here. And this little program decided it was done. Technical difficulties as we get started. Huh, that's really weird. I don't want to do that. Look at the market go, man. It is on fire, but I am completely locked up. My whole computer. Oh, I got to close this program here. Let me see if that will help. Why in the heck is this thing completely locked up right in front of the whole school? Let's see if we can't free up some memory and get this thing going again. I got too many things running, I guess. All right, let's try again. Try and get our trading platform to play. Come on. All right, I was playing with it before, and then I started opening up a whole bunch of stuff. Sometimes I use a program called StreamYard to stream everything over the screen, and I think I had too many things going. Plus, I got. Now what's it doing? I didn't save all the stuff I had done for the class. Ooh. Okay, let's come in here. We got the NASDAQ going. We've got the live cattle going. Can you guys see? Oh my goodness, now it's going to make me download all the data again. I didn't remember anything I had done. All right. S&P. Let's go to the daily S&P. Look at these markets. Oh my gosh, these things have been absolutely crazy. Am I making money? Yeah, I'm making money. Just not like explosive money. This is an explosive money opportunity. And I'm doing it with options, and I'm selling options against it. And so I'm collecting premium, but I'm not participating in the big growth. And so now I'm trying to find an opportunity. I put a couple of long calls on today on a couple of things. So we'll see if we can't get something out of them. But let's come in and do a little day trading today. Let's come into the NASDAQ. And you can see this market just went crazy up like this. It had this beautiful run here just like 30 minutes before the market, before we got to power hour before class. And then as it was going up, I was like, oh, there's a sell opportunity. There's a sell opportunity, but I'll wait till class comes. And I didn't. There it went, flushed like a toilet. So we were looking down here at, let's go down to the 1 minute chart on the NASDAQ. And what's funny is I already loaded this. See right there, that's where I was looking. I was waiting for you guys to come into class. I was waiting for class to start. And I was like, there's where we're going to go short. There's where we're going to go short. And nope. We didn't go short because class hadn't started yet. What time was that? That was right at 12:53. So a couple minutes before class started. That thing took off like crazy, and then it flushed like a toilet. All right. Today's class, now that we're getting started here, everything got all my other programs closed down. And I always like to pull up this little marquee here. So what I want to do today is I want to talk a little bit about risk and money management, because that is one of the most important things that we do in this class, is talk about risk and money management. You know, I always have a saying for people, and that is trading is not about making money. All right. Everybody thinks that coming and trading is about making money. It's not. Trading is not about making money. Trading is about not losing money. And until you figure that out, you're not going to be able to make money in the markets, because all you're going to do is keep giving the market your money. So we have to protect ourselves. And that's the most important thing that we can do, is protect our nest egg. And it doesn't matter, you know, you started with $10,000 and you build it up to $5,000. That doesn't mean you now have a $5,000 cushion that you can play with. No, that $5,000, that becomes your new nest egg, and you don't want to lose that either. So you have to protect that as well. So you want to protect your position based on mathematics and the movement of the market. So there's a little math model that we oftentimes, here, I got to close this too. I'm trying to keep all the memory clean. Let's see, I close that too. All the things that are taking up memory. Okay, I think we're about as clean as I can get. Okay, so this little dilly here is called the 1 to 2 risk versus reward ratio. Now, this is very common in the industry. And I'm going to go through this with you for those of you who haven't read it. It's over 80% of traders fail within the first year. The key difference between success and failure often lies not in the ability to predict markets, but in the mastery of risk management. At its core, the 1 to 2 risk versus reward ratio means that for every dollar risk, the potential reward is $2. A simple yet powerful principle forming a sound trading strategy. They also fail because they give up at the first sign of failure. As soon as somebody starts to lose, the problem is they have a lack of knowledge and a lack of experience. And so that's why a demo account is very important. You want to work in a demo account, but the problem with people who trade in demo accounts is that they don't trade in the demo account the way they end up going to be trading in the real money account. So they do things in the demo account that they wouldn't do in real money. And oftentimes that causes them to make lots of money. They make lots of money in the demo account, but then when they trade real money, they lose all their money. So you got to be careful and make sure that you trade in the real money account the same as you do in your demo account, but you need to trade in your demo account the same way you're going to trade in the real money account. This is the core of my scalping strategy, scalp and trail strategy. I want to scalp to adhere to the 1 to 2 risk versus reward ratio while my trail exceeds it. All right. So we want to try and have a 1 to 2 risk versus reward ratio. This is just a little calculator that comes in here and shows you that you don't have to be very good at trading if you adhere to the 1 to 2 risk versus reward ratio. If you have an 80% winning ratio, meaning that you win 80 times out of every 100 trades, you win 80 and you lose 20. Well, using this core math, you'd have 16,000, 2,000, and you still have a net profit of 14,000. As you come down, you go 70% winning ratio, 60% winning ratio, 40% winning ratio, or 40% winning ratio. And look, you can have a 40% winning ratio with a 1 to 2 risk versus reward ratio. A 40% winning ratio, meaning that you win 40 and you lose 60. And a lot of people, that's when they first get started, that's kind of where they're at. They're maybe down here with the 30-70. But the 40-60 is kind of where most people can dial it in if they have a little training and a little experience, a little practice in a demo account. And then they can pick it up and get up into the 50%, 60%. If you can get up into the 80%, you're like a superhero. So keep that in mind. You hover right around a 50% chance. Sometimes you can move up into 60s, down into 40s. But if you stay in this range right here between 40 and 60%, we come in here and profit to win. You can see that you're going to make 8,000 on even if you're only 40% right, 40% out of every 100 trades, and you lose 60% of them. If you stick to the 1 to 2 risk versus reward ratio, you're still profitable at the end of the trade, at the end of the 100 trades. Okay, so that's very important to understand that you don't have to win every trade. In fact, you can lose 60% of them and still be profitable. Now, you want to be more than 60% profitable, so you want to be careful, and that's why we want to go with a risk reward ratio of 1 to 2. Now, that said, most traders don't set up a risk reward ratio of 1 to 2. Now, the reason is because we don't, that's not how the market works. So the market works with, you kind of take what the market will give you. And sometimes that's bigger than the 60% or the 2 to 1, and sometimes it's less. So what we're going to do in here, in this situation, we're trading the NASDAQ. This is the NASDAQ mini, and we're getting some nice long green trends up in here. So we're going to look for a reversal, and then we're going to take the opposing side, and we're going to take as much as it'll give us. And we're going to just risk the distance between one dot to the other dot. Now that's the risk is from one dot to the other side of the other dot. Now, in this case, that's $225 in this situation. The profit potential on that was $780. So that's like 2, 4, 6, 8. That's like a 4-to-1 risk versus reward ratio. But of course, if you're going to try and take your profits off at 2-to-1, you're going to stick to that 2-to-1 risk versus reward ratio, which nobody really wants to do. You don't want to limit your profits at 2-to-1. Now, I do that when I go in with multiple contracts. So what I'll do, and we'll go in and we talk about the QOCOs. I'm going to do that today. Let's get an order in here. We're going to come in here. I'm going to drop this in, edit. We're going to start trailing on that ATR dot. Okay, so what we're going to do is as soon as that thing hits that ATR dot, we're taking a short position. And so we want to come in and put our stop right above the previous high of the bar, right in there. So that would be our risk ratio, or that would be our risk. So 240. So we would need 440 to go to the reward, right? 440. That would be clear down here. But we can't tell the market what to give us. We can't say, well, I'm short market, so give me 440. So what we're going to do is we're going to put our order in there to risk the distance of one bar. Now, for $240 or 440 is too much for you. I mean, 440 winning is not too much. It never is. 240 might be too much to lose on a single trade. And if you're going to trade 100 times and you lose 60%, that's a lot of money to lose against your whatever $10,000, whatever $100,000. So what we want to do is we'll just take a small risk, and we want to watch the market. So we can only do what the market will give us. And that's why I say that we don't generally set the risk reward ratio. We take the risk off the table by going to smaller accounts. So if you want to do something that's $240 is too much money, because this NASDAQ is a big market, you can come down and you can go to the NASDAQ micro. So this is the NASDAQ micro right here. And if we pull the NASDAQ micro, and that should load fast because I had it loaded up beforehand. There it is. Okay, so we're going to go down to the 1-minute chart again. And you go down to the 1-minute chart because that's where you're going to get, I mean, it's the smallest increment. You can go down to the range bar charts, and we do that a lot. We go to the range bar charts. But when you're trading, oftentimes you start with the 1-minute chart. And you notice that the risk reward ratio from one dot to the other side on this one is $14. That might be a little bit easier for some people to swallow. All right. So look at how nice these markets are moving right now. Let's bring up, well, let's come back to this one. We got an order on this one. So we want to see this market turn and flush back down with an ABC pattern. That's what we're looking for. Is it going to give it to us? We don't know. We can lose 6 out of every 4 times, still make money if we're going to go to the 2-to-1 risk reward ratio. But we don't really get 2-to-1 all the time. Why? Because we have to play what the market will give us. And so that 2-to-1 risk versus reward ratio, that is an academic mathematical model that really never gets adhered to. I mean, there's places where you can set up your orders to adhere to it, but you don't know if it's going to adhere to it or not. It's the market does what the market wants to do. You can't tell it, hey, you got to give me that 2-to-1 risk versus reward ratio because Land said so in class the other day. The market's not going to listen to you. So what you do is you just minimize the amount of loss that you're willing to take, and that's one side to the other, and that's about as minimum as you can get. And then if you need a smaller amount, well, you go to a smaller market, because you still need to go to the other side of the trade. You need to go and risk just to the other side of where the bars are. And the little dot will flip for you. And I'm using the average true range ATR, and I like to use it at a setting like this. So this is a 1, we got it set to a 5 right now, which is pretty aggressive because this market's being aggressive. If the market's less aggressive, you can loosen that up. You have to go up and move that to 6, 7, 8. Sometimes we go all the way out to 1 and 1. But we generally start at 1-to-1. But the markets have been so aggressive lately. I'm clear down to 0.5, which is about as aggressive as you can get. So we're going to look for this market to reverse here, and we're just going to trail it up. You'll notice that I got a trailing stop for quantity 1, and we're just going to trail it up. And if it turns around and starts coming back down, it'll cross that yellow dot, and the hope is, right? Hope and fear is that it'll cross and fall just like this one did. Now we're going up with an ABC here. We'll see how far it goes. It might just keep right on going. We might get a little dot in here and then a rally, and so that would be a little loser in the middle. We'll see what happens. We don't know. Nobody knows. All you can do is just play the system. So right now we got it set on the dot. We got sell 1 quantity stop, and it's a trail on the ATR, which is that little yellow dot. So then we just sit back here and wait for it to cross and see if it won't fall back down. And then as soon as it does, we're going to put our order in there to make sure that we protect ourselves to the downside. And the way we'll do that is we'll just grab the stop and we can drag it on the screen just like that. And as soon as it fills, then we'll put that right back behind the one price bar. And we'll watch and see where it's at. We might put it a little closer, a little bit further away. Depends on how aggressive the market's being. Kurt says he's using the 0.8. 0.8 holds your order back a little bit farther, so you won't get a false entry, but it also holds it back a little bit farther so that you don't make as much money on a smaller move. There's no right answer, Kurt. It's just a different answer. I always tell people there's no right answer when you're trading. There's just a different answer. What you do might be different than what I do, and it doesn't mean I'm doing it right and you're doing it wrong. This time, I might be doing it right, and you might be doing it wrong. But next time, you might be doing it right, and I might be doing it wrong. And we didn't change anything. It's not that there is the right setting and the wrong setting. It's the right setting for the particular moment in time. And right now I'm looking at it and thinking, hey, this little 5 looks pretty good. So we'll see if it'll cross at 5. I might get, it might come down, hit my 5, and then just keep taking off. I might have mine too close. So, that's why you would loosen it up, like Kirk says. We come in here and loosen it up, and we raise that up 6, 7, 8. Kirk says he has his on 8, so he's a little bit farther behind. You can see how he's trailing. So he'd probably need a better confirmation that the market's actually falling. Whereas mine, I've been having it a little bit tighter, so I get a little bit sooner entry. And maybe we'll go to a 6 right there. One of my favorite numbers is 7. I like 7. I had it on 5 earlier because the market's so aggressive. But this market likes to flush hard and fast when it flushes. It goes up slow and down fast. So I put it a little bit. We'll put it at 6 right now. Let's see where that's at. We got that little tail that came out the bottom on this one. So we don't want the tails to hit our yellow dot. But we're getting all flat bottoms right now. And we got hairy tops. So that's good for a reversal. Okay, we're here. We're getting a red bar. Usually we don't get crossover till we get these two to come together up in here one more. So we'll see what happens. Okay, we got our order in there. We're not going to take a big risk. We're going to come in here, and I'll just put it right above that bar, the action bar. If it goes up and breaks new highs, I'll just get right back out. Try it again. Again, remember, I can lose 6 times for every 4 times that I win. Now, Kirk probably didn't get filled on that one because he's at 8. I'm at 6. So I got stopped out. Kirk probably didn't get stopped out. So now we'll just set it up and do it again. Come in here, edit, and we'll go in here and we'll trail on the ATR. And then as soon as that market gives me a new bar, 12 seconds, it'll jump up there. 7, 6, 5, 4, 3, 2, 1. Did you get stopped out, Kirk? Oh, you're on MNQ. You're on the mini micro. Okay, so that's taken off. It came back, stopped us out, got me in because I had my stop really close. Kirk says he didn't get stopped out. So I said, well, oftentimes you wait for the 2 of them to come together. Yellow and red come together. But look at this thing go. Look at this market go. It's crazy. These are called decision points. All right in here. These are our decision points. And so this is where we make our decisions to get in and out. Now, what I'm doing is I'm sitting here letting it trail up behind the market to the decision point, looking for it to flush back down. Now, oftentimes what I'll do is I like to count up as I start going. So there's 1. So this time I'll go 2. So now we'll take 2 short. Oh, that didn't change. Let's kill it. Go 2 here, stop. And I'm going to drop that in there. And we'll trail the ATR with 2. So we'll go 2, and then we'll go 3, and then we'll go 4. So if we get stopped out, each time we get stopped out and the market keeps going in our favor, we'll add 1 to it. Is that dangerous, Land? Yeah, it's dangerous, but it oftentimes pays off because you're digging yourself in a hole. We're now down $140 on our first trade. So 2 will now get that money back a lot faster. I can take 1 off and let the other one run and still get my money. But in this market, $140 ain't nothing. That's like kiss that goodbye in a heartbeat. Kirk says maybe you should trade multiple lots. C-Boss says we're rich, rich, rich beyond our wildest dreams. We'll get there, man. We'll get there. We got to get some action happening here. We started out with 500,000 in this account. We're up to 525,000. So we made some money. We're getting rich. This is all demo money, of course. It's not real money. I'm not going to come in here and trade real money on in YouTube. Some guys do. I mean, I do with my regular account. I come in here and with my I just don't like to scalp in front of people, because most of the time when I'm scalping, I just sit here. Just don't do a whole lot. So it's really boring. So it's a lot more fun, exciting, and educational if I do it in the demo account. We can do more things. But I show you my real money account all the time when we do the morning sessions. I did okay today. I was up $1,000 today, made $1,000 today. Not as much as I wanted. Could have made a lot more if I was doing long calls instead of short puts. Well, we just sit and wait for it to reverse. We're just waiting for we don't know when it's going to reverse. So that's why I just put the trailing stop in there. And if I get stopped out and it goes again, it's the nature of the beast. I don't know when it's going to reverse. But if you look back in history, it's been really nice and clean. So it's just reversed and went, reversed and went, reversed and went. So the markets are volatile right now. Let's see if it won't just reverse and go. We're right at 1 o'clock. Look at that. Boom. Right before power hour. Okay, here we go. Here we go. Let's get ready with our stop for 2. Okay, there we're at. Okay, well, we're going to drop this one just right above that green bar right there. Now we just want to see it flush out. Now, what we can do is we can come in here to watch. I'll get rid of this one. Well, actually, we can come in here and we'll go add OCO. If I add an OCO, though, the problem with an OCO is that I put that down here and say, okay, we're going to take a profit off at our 140 to get our money back. See, that's 340 right there. That's going to take both of them off. I don't want both of them off. So I'm going to come in here. I'm going to have to, just to get my quantity 1, I'm going to put a limit order here for a profit, just like right in here. And that will get us, I don't know what it is. I'm going to have to measure. I want to get my 140 back with my quantity 1 contract. I could do that. So that's 135. So we'd want to come down here. If I just want to get my money back, let's measure this down. That'd be 170, 160. That'd be good. We'll put it right in there. So that right there would just, I want it to only be 1 though. Okay, so we'll take 1 off if it'll come down and just touch right there. Now where'd our stop go that was up there? Oh, I took it off. So we want our stop. We're going to put, okay, well, now we're going to put our stop on the yellow dot right there. And we're going to go. Now we're going to trail down with, that would not get us a reversal. So we want to go, right now we want to do 4. So we'll go like that. And then that needs to jump. Oh, we're going to wait 42 seconds. Now I'll move it myself. Okay, put it right on the yellow dot, edit, make sure it's still trailing on the ATR. And I'm going to do 4 contracts because that would just reverse our position. We'll start going long again if the market doesn't flush out. The problem with doing that, reversing back and forth, is that then the market can get tired and just go bop, 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 bop sideways, and you just get ripped your wheels off. Okay, so we're trying to get our 140 back. That's what this first one's going to do, take our 140 off. See how it does. Last time the market took a short, it went so fast from here to here. It just went straight down really fast. And we're not getting that now. It looks like it wants to hold in strength. Look, we're getting green volume bars already. MACD is rolled over to red. It's not good. We might get stopped out. That's showing too much strength. I don't like it. Oh, crap. Just took it off. Why is it showing strength right there? It's not supposed to show strength right there. Are we going to take another long here? I don't really want to take another long here. It's going to close above those yellow dots and put us another yellow dot down here. That could be a buy signal, but I don't want to take it up there. It's a perfect little ABC, isn't it? It's like, doot, doot, doot. There's our little ABC, and away we go to the next leg. Is that what's going to happen? Are we going to feel bad that we're not getting long right here? Oh, we have to do it. You can't not do it. You have to take it. It's the signal. Doggone it. I didn't want to go there. Edit. Okay. We're going to do 4. Trail. ATR. We're going to do the same thing. We're going to see if we can get a reversal. Okay. We're going to take dollar calculator. We're going to go up 1. Now we're 270. Let's go 270. Let's just do this one like this. 270. Let's go to 270. 280. Okay. We're losing all of our strength here in power hour. Come on, you stupid thing. Don't sit here and diddle around. Look at all this beautiful trending right up until we start trading. That's how it always happens. Come on. So if we want to get our money back, we have to put a limit for 2 at this point here. I don't know if I can get up there. See, I didn't want to take that long position there. Now we're getting a reversal. Just going to go up and stop everybody out just to prove that they could. This is where you get killed. It starts going back and forth, back and forth. The market just dies. And it stops trending, and you're trying to capture a trend. Come on, baby. Look at it. Look how dead it is. Just suddenly died on us. The market just died. Are you kidding me? Are you kidding me? You kidding me? Look at how it just died. Look at that. It's just like everybody walked away right at 1:30. Everybody's like, I'm done, go home. That's why I don't trade real money in power hour. I hate power hour. That's why I come and teach it with the demo account in power hour, because I never trade with real money. Yep. So, Kirk says, sit on your hands. Many ways to skin a cat. Come on, you rotten dog. What a doggy market. Nothing worse than a market that's moving really nice. Right when you get in and decide to trade, it dies. Ask me how I know. Happens to me all the time. If I was trading real money right now, I would take my 580 and I'd walk away. I'd say, you know what? This market is, I can wait to start moving again before I want to play. Here we go. Come on. Come on. There, we're getting a little bit of bar, a nice bar down. Come on. We need a nice big long red bar here, like that one. Like this, like this. Get your money back. You want to play get your money back? See where our 580 is? Now we got to go to 580 with 2 contracts. So 580 would be 240. 250. Let's go right there. This is a single. So we'll go limit with 2. That would get us our money back right there. Would it? Yeah, it would. Wait, what's this? What's this set at? No, this is set in the wrong spot. I think my dollar calculator is set for quantity 1. Oh yeah, quantity 1. That's what we want. Okay, 1 contract, and we got 2 contracts. So to get our money back, it has to go to here. Oh. Can you believe it? I ain't taking that one. Let's wait for a second. Let's go down. That's 1 minute chart. Let's wait and see what it does. This is where you get your wheels ripped off, sitting here trying to go back and forth, just like I said earlier. Go back and forth. You don't know which one's going to take off and go to the moon, so you feel like you have to take them all. That's why I was saying you have to go up 1, go up 2, go up 3, go up 4. Because when you catch the one that takes off, because one will, you watch, one of these is going to take off and go to the moon or flush out and go all the way down. You're like, why wasn't I trading it? Well, you weren't trading it because you got beat up like 3 times in a row. Now we'll go. See, that's why my numbers go 1, 2, 3, 6, 7, 14, because you bring them up. If you right click, you can modify those and make those buttons say whatever you want. You right click on them. So you can see I modified mine so it goes from 1 to 2 to 3 to 6 to 7 to 14. It's not that I'm holding the stop too close. It's just that the market's not moving at all. It just died on us. Okay, we're going to try again. Put our stop in at 3. Needs to immediately just go in our favor or we just get out. And it's not going. It ain't going to go, not with 3. Oh, man. Sometimes I hate being a trader, especially when people are watching. Oh, you piece of crap. We're just going to build ourselves a massive hole. We're going to have to dig out of tomorrow. We only have 25 minutes till the market closes. They'll wait till the market closes, then the market will start to run again in the after hours. You wait and see. If the market doesn't go up, it's going to go down. Did you know that? Yeah, Kirk's right. Yeah, you get to learn what not to do in Power Hour. Come on. You get to see us try to manage our money here, that's for sure. You get lots of experience managing money. Okay, let's go down here. We got it 970. Okay, 970. We got to go into preferences and change this up. Now I can't do the math in my head. 970. Ugh. Oh my goodness. Are you kidding me? Are you kidding me? It's going to go again. Okay, now we got 6 contracts. Go preferences. 5, 6. Ooh, I hate it when I get like this. 6, and we have to get back how much? 1420. Doesn't have to move very far with 6 contracts. But it can't come back against us. It has to just immediately move in our favor, or we just get out. Look at this market. It's just dead. Dead, dead, dead. Come on, Mr. NASDAQ. Everybody wants to sell before the closing bell. It ain't going nowhere. It ain't going nowhere. You're kidding me. You're going to stop us out again? The volume's gone to nothing. Three losses in a row and you should stop. But then we'd have to close this down and we'd be done for the day, and that's no fun. Come on, baby. Flip the dot. Flip the dot. I ain't going long. Ain't going long right now. Although this thing is saying we should be getting ready to go long. Of course, that's what it said here, too. And it said we should go short here. Cash is a position. If you have any. If you have some. We're giving all ours to the market. Come on, give me another opportunity. I want another opportunity. Watch it take off and go to the moon now. Just to spite us. So we're getting a nice little wedge pattern here. That would be a little ABC pattern going on there. Okay, we're going to try again to the long side. That's what it just said. We're watching this little chart right here. It came down, made higher highs, and away it goes on the higher highs. So we'll see if it wants to go this time. You watch the little chart in the upper right-hand corner. Gave us higher highs. But it ain't going nowhere. It ain't going nowhere. We got green on the MACD, but it's a top green. It's not a bottom green. We got green volume, but that's weak green volume. Oh my goodness. 14's max. It won't let us go any better. I think 14 tops it out. You get max loss when you hit that. $2,000 is max loss a day for me. $2,000. We'd stop right there. Why 2,000? Because my goal is to make, well, actually, my goal is to make $500 a day. There we go. Are we getting a little energy out of that thing? So, technically speaking, it should only be $1,000. But we'll say it's 2,000. So our goal is $1,000 a day when we're on the full size account. Because then you want to double that, double your goal, and then that's what you lose, because then it takes you 2 days of your goal to get you back to break even. So you don't want to go any more than 2 days. I think that's a very good rule of thumb. Okay, the little chart in the upper right-hand corner told us to go long, but it's dying too, so. What are we out right now? Now we're got how many contracts in? 7. Options, preferences. 7. Chart. It ain't going up. It ain't going nowhere. It ain't going nowhere. So we got to go $2,000. It ain't going nowhere. It'd have to go to right there. And then I ain't going to even go to that. So we go 7. I don't want to double it to go down. We don't need to double it. Just do 7, 8. Edit. Trail. ATR. It's got to go up there. And we got to put a limit order up there for 8. It ain't going nowhere. Just dead as can be. I thought we'd have a better day than this. The start was great. I was sitting here watching it through all this, and I was like, I want to trade that. And I'm like, no, I don't want to have any numbers on the table before class starts. Ugh. It's going to go try and bounce back up again now. Now our stop's too close. Are you kidding me? Are you kidding me? Are you kidding me? Look at that. It can't even go. It can't even go one price bar. It can't even move one price bar. It refuses to even move one price bar. Oh, we're only 7. I don't want that to be 9 then. We're so slow now. I got a ATR. We got to raise it up. Let's go to 7. Let's go to 7. Okay, so we got 7. And we're down 2,700. So we just got to go to 2,700. 2,700 is actually a 7 contract is not that far. It's not that big of a move in this market. This market is such a big market. And then you think, you're like, well, if I'd have done just the opposite of everything you just did, Lan, I'd be rich, rich, rich. No, if you did just the opposite, you'd probably be losing again too. The market just didn't move anywhere. It's just dead. It just completely died on us. 3 strikes, you're out. How many strikes have we taken? We got like 42 strikes in here. They don't let you go up to the bat more than 3 times. You go up to the bat 3 times, strike out, you're out. Done. Walk away. Come back later when the market's moving again. Go play your guitar. on, you rotten thing. Okay, we're getting some movement here. Let's put in our limit order. See if we can get back to break even before class is over. Come on, one little burst. That's all we need. Come on, little market. Give us one little burst. Come on, everybody wants to pile on right now. Everybody wants to get in. Come on, come on, come on. Yeah, Tesla's earnings are coming up. I don't have very much money on Tesla just because of that right now. I think I have a little bit long, not very much. I think Tesla's going to have good earnings, though. I think it'll go up. The problem is I've seen a lot of times where they have good earnings and the market goes down. It wasn't good enough earnings, so the market goes down. So be careful. Implied volatility is outrageous this week, if you haven't noticed, because all the tech firms or all the big tech companies are having earnings. And so it's causing the whole market to have a huge amount of implied volatility. There we go. 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 Come on. Keep her going. Keep her going. Keep her going. Oh, wait a second. Oh, wait. Are we going to be okay here? Maybe I didn't put that out far enough. Where did I get in? Oh, I got this too close. This is where our money's at. It's way out there. That's not going to give us our money back. Go here. We want to get our money back. Hey, look who come to visit me. You guys want to meet somebody? This is Chowie. Hey, Chowie. You're famous. Yeah. Famous dog. How you doing, Chowie? He's a trader. He likes to trade the S&P 500. Oh, look at him walking on the keyboard. Chowie, don't interrupt. Okay. Go find something to eat. Well, is that the only little burst we're going to get out of this thing? Not going to give us enough to even... Nothing, no trend at all. Here, going in. Here's the 10-minute bell. Watch out, because 10-minute bell, the market's going to go bam, 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 bam. Take everybody's stops out. Getting real close to the 10-minute bell. What time is it? 48. Oh, we're still 2 minutes away. My clock up there must be a minute fast. Okay, got a lower high. See if we can break above that high. That'll encourage some people to buy and break above the high, but we're coming into the 10-minute bell, so gotta be careful. Be careful now. Move up high enough that we can get at least one more dot. What time is it? 49. Uh-oh. 32 seconds. We're going to have the 10-minute bell, and our stop is at a loss. Still have a loss. I didn't double it. I just said, take me out. I didn't reverse it. Come on. Don't stop us out on the 10-minute bell. 11 seconds. 9, 8, count it down. 7, 6, 5, 4, 3, 2, 1. Boom. Oh, there we go. Ooh, look at that. It gave us all of our money back, and now we're short. I guess I did have a reversal on there. I didn't want that reversal. That was not what I want. I thought I didn't have the reversal on there. That little pop on the 10-minute bell gave us all our money back, and then I had the reversal, and it went right back down, and $2,000 loss right there at the end. Did you see that? If we wouldn't have had that stupid stop on there, we'd be back to break even. Now we got to make $1,000. Well, I got to make $2,000 in the next 10 minutes. We can do it. You wait and see. We'll get there. Last time we did this, we were day trading not too long ago. I think it might have been just the last class we were doing day trading. We got right. We were down like $2,000, and the market closed, and I saw all the numbers on the screen. Everybody left. It went down. We had almost no one in here. I think there was like 10 people hanging around after the bell. And we kept trading, didn't we, guys? Those of you who stuck around, and we made it all back and ended up making some money, I think. We got all our money back, our whole loss. So everybody sat there and watched me lose money for the whole hour. And then right at the end of the bell, we kept trading after the bell was over because we traded in the after hours because in the futures market, that's just the stock market that closes. The futures market doesn't close for another hour or two. So till 3 o'clock. So we got another hour to trade after the market in New York closes because we're in Chicago. So, oh, look, it's still going up. Now it's getting ripping higher. So now what we want to do is we're going to go with, let's do 3, and we'll drop this in here at ATR to take a short position. Actually, let's do this just for fun. We'll get more aggressive if we can. Maybe we'll be too slow at it. Edit. We're going to trail. Price bars back. 1.1. Yeah, there we go. We'll get a little bit more. We'll even go more aggressive. More aggressive. Come on, baby. We'll trail on one price bar back. That way the low, as soon as it crosses, makes a new low on the bottom, it's got to immediately move in our favor. Go, go, go. Flush, flush, flush. Okay, so we got 3 contracts. So where's our dollar calculator? And we got to do here 3 contracts. Where's our preferences? Chart, trade. Okay. Oh, it stopped us out. You dirty dog. Well, the red dot says that it's going to go up for a while. But I think it's going to stall out and fall. Which is why I'm going to take a long position with a single contract. Okay, go. Go. Don't look back. We'll come up and test that high. We'll just take it off right there. Take a little scalp out. Okay, so we got that one. All right, so that made us a little $250. There it goes. There it goes. Starting to move now. Went through this whole dead thing for. Now he's finally got a breakout. 5 minutes before the market closes. You dumb nincompoop. Put one right here. Come on, come on. Are you guys having fun? Are you learning anything? Learning anything? Trade along with land just for fun in the demo account. What software are you using, Lan? Well, I'm glad you asked.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, you want to see something else that's fun? What if you think it's going to come back down and touch the yellow dot and then go up again? You could do this. You come in here at the limit order. You drop your limit order down here. You program it by going edit screen and you say trail on the ATR. And it's a limit order. So it'll trail a limit order on the yellow dots. That's kind of cool, right? You can also put in a limit order, another one, edit. Oops, that's not what I wanted to do. Edit, and we can tell it to trail on the parabolic SAR, just like that. Now we got two limit orders trailing behind the market, one on the yellow dot, one on the red dot. So if the market comes down, touches those levels, it'll get in with two contracts, and then that's an anticipation that the market's going to turn and start to rally once again. You could also come in here and go limit order, and you can set this in here, and you can go edit, and you can go trail, price bars back. And you can say 1.1. Now 1.1 is one price bar, 0.1 is one minimum move. So it gives it just a little bit of room to kind of accommodate for the spread. We got 24 seconds and watch those moves. Those positions will all move for us. Now this is a limit order saying if it goes up there, we're going to take a short position. Putting a limit order up there to take a short position because we're not long. That's not a profit taker. That's getting you into the market to the short side. So it'll come up there and then I think it'll flush back down. These will catch you to the long side. So it'll come down, get into these, and then go back up. See that? Pretty cool. So we're trailing one limit order on the red, one limit order on the yellow, and one limit order on one price bar back. 1.1 price bars back. That's just for the spread, that 0.1. One price bar and one minimum move. All kinds of fun stuff you can do with track and trade. Did you know you could trail a limit order? Kurt? Kirk says you got stopped out. You were trading the 8, right? Chowie. His name's Chow. Like ciao, like hello, goodbye, like in French, in French language. Okay, let's see what happens here. We got 1 minute before the bell rings. We got 44 seconds left in this trade. 40. And remember, that's the stock market bell. It's not the bell for the futures market. You can still trade after this. But I would suspect that in the futures market, the market will actually flush down. So we shouldn't actually have all these limit orders in there. But I want to see what they do. Just show you what they do anyway, because it's fun. And market might come down, touch them, and then bounce and go back up. But I think mostly we're going to probably get a big retracement after this. We'll see. That's what happened last time. Market closed and we were up like that, and we were down like $2,000, and then flushed, and we made a whole bunch of money. Just on a reversal. Look how far back the red dot is, though. What is it? Is that Italian? I thought it was French. Ciao. It might be Italian. I don't know. I am not a French speaker. This is my girlfriend that named him. Okay, so we touched that one and we're long now. Touched another one. Now we're long with 2. Come on, baby. Come on, baby. Touch one more and then go up. You can do that. I'll let you do that. Come on. Come on. Come on. Okay, now go up. Don't flush down. Market's closed. Why would you want to go down? I told you, I think it'll go down, but I wanted to see I wanted to show you what those orders do. See, now we're long 3 because we had those 3 trailing stops. Now we need to just market go up. That's why we generally use intercept orders to the wrong. Oh, there we go. Look at that. We got her. Yeah, we got her. There we are. Then we come in here and we'll put that at a break even in case it comes down again. We'll just get stopped out, break even. Won't lose any more. But we can also tell that one, edit, trail, ATR. Now we'll trail those three up on the ATR. We'll take one off here at a profit. How about that neat little strategy? There we go. Look, the MACD rolled over to red. Okay, here we go. See if we can take a profit off right there. Come on, you can do it. You can do it. You can do it. Break the high, break the high. Notice that I put the limit order on the inside of the high, not on the outside. Because if you wanted to get filled, you wanted to go up and test the high, so it's got to go through your order. Didn't quite make it. Oh, this was the high that I was putting it on, but this one here is the one it was testing. Put it inside, just a little bit inside this high. Come on, test it one more time. Test it one more time. Go up there one more time. You can do it. You can do it. Oh, yeah, baby. Look at it go. Okay, now we're up. Now what we can do is we come up here. You want to continue? Yes. We're going to drag this way up there. We don't want to lose all that money. Let it go if it'll go, but don't lose it. We'll go up and test that high again. I don't think it will, but we'll try. We just stopped out 3. Oh, now we're short 1. How do we get that? Oh, that's because we had a stop for we took one limit off. We got to always watch the numbers. Got to watch the numbers and make sure that always watch the numbers. Come on, come on, push it up there, push it up there. You want to see a fun little trick? Watch this. Let's set one up, a fun little trick. Let's come in here. And we're going to add a new one like this. And we're going to say that this is a limit scalp. Class is over, so everyone's leaving. So we'll do some fun stuff now that class is over. Okay, we're going to use a limit order. What we're going to do is we're going to do a limit order. No, we're going to use a stop order. And then we're going to go, we're going to have an attached stop at, well, let's do 40. And then we're going to do a limit at 10, like 10, or like 20. And then we're going to not trail. Let's just see what this does. Okay. Is this going to do what I want? Yeah, watch this. Okay, watch this. We're going to come in here. I'm going to push this up. Okay, we're going to push this up until it gets way up there to the top where it looks like it's going to bounce. Okay, get this out of the way. Ooh, wow, look at it go. Get that out of the way. What the heck is going on? Let's cancel this exit chart. Let's go with a limit order. Let's edit that. See if we can put we want a limit order at 20. We want a stop order. We don't want a stop order at all. See if it'll let us go nothing. Yeah, that's what we want. Okay, now we're short. Ooh, look at it go. Push this right up in there. I wanted to test that up there. As soon as it flips, it'll flip. It'll flip. Watch it flip. Oh, flip. Come on, flip over. Watch this. It's going to flip. Yeah, the market's closed for Tesla, so we can go listen, but come on, flip it over. Because if it goes above the green line, watch that limit will drop to their side. And we'll click the button and we'll be in the market we'll put that underneath the market for a short position. Watch this neat trick. Come on, we need the neat trick to happen. Okay, we'll put the neat trick down here then. Come on, come on. Flip, push. Okay, we're short now. Short 6. I should just be doing this with one. I don't know why I'm putting this up to big positions. Let's do it again. Let's just do one. We got plenty on now. Okay, right up here. If it flips, we'll flip. See, we got our limit back there, so it'll take profits off if it goes down. Come on. Flip me over. Come on. You can do it. Almost made it. Didn't quite get it. Let's try this one. Just broke that last bar. Let's put it at the top of this bar then. Come on. Go up again. Flip, flip. There. Got it. Yeah, nothing else. We're having fun. Okay, do it again. Up here at the top of this one. Flip us over. It's the flip trade. There we go. Come on. Push it. One more. There we go. Got it. We're building ourselves one heck of a position. Look at this thing run after the hours. I told you, it moves after hours. We're short 8 contracts, though. Let's do one more. See if we can get it to go up here. We started with 3, though. We shouldn't have done 3 and 3. We should have just done 1, 1, 1. Yeah, yeah. The NASDAQ is trading after hours. Come on, baby. Give us one more. And then flush, flush, flush. Look at this big run. My gosh. I told you after hours is crazy. Last time it went straight down, flushed down like a toilet. Oh. Didn't come up there for us. Come on. Come on. What you going to do now? What you going to do now? Going to flush? You're going to just go sideways. Now watch it just die. Then it'll do the after hours thing where it just goes straight sideways for the next half an hour. For the next hour. Oh, that bug's almost gone. Nothing in it. Okay. Almost got to break even. There's break even. Come on. You guys just bought a whole bunch of Qs. You want to sell them now. Make your money. Okay, you took some profits off. Let's go see close position. Oh, no, took it off at a 33% loss. What are you talking about? Now what we doing? Now what we doing, Kurt? Kurt, you're about the only one talking to me. Everybody else just watching. Come on, guys. I want everybody to say something in the chat. Don't be shy. Don't be shy. There we go. Touch it. Touch it. Oh, you see how close it got to touching it? It was like it saw a hot plate. It almost wants to touch it. Wants to touch it. Touch it. Go ahead. You can touch it. Come on. You can touch it. There we go. That's the way. That's the way. Good little market. Good little market. There you go. Oh, touch it. Touch it. Touch it. You can do it. Oh, you can do it. You know you want to do it. Yeah, you want to fall a little bit more. Oh, that hurt. That was painful. We can leave our other little order up there. Look how close it got. Got within pennies of taking our profit off for quantity 3. That would have been a nice little win. Get us, dig some of us back out of the hole. We were out of the hole and then we screwed up. Left one contract on too many. Come on. There it goes. There it goes. Oh, yeah. Oh, yeah. That feels so good. Okay. There we go. One more. Oh, look, we're up $108. I told you we'd get it all back. I told you after hours we'd get it all back. And all you guys who left early didn't get to see it again. You didn't get to see it again. For the second time, we made all our money back in the after hours. We were down a lot too, weren't we? We got our heinies handed to us with this little thing here. I think maybe you learned a few tricks right here today. That was a good trick. Good trickery. All right, guys, that's all I got for you. I'm going to let you go. We'll catch you again tomorrow morning, bright and early, 9 o'clock a.m. We'll do it again, the last time for the week. Take care. If you have any questions, please let me know. And it's always good if you throw a little thumbs up in there. Hey, I got this back to green today, so I deserve a thumbs up. Let's get a little thumbs up going in there. And then if you have any questions, please go make a comment in the comment section. That's always good, too. We like to see comments. And we will catch you again tomorrow morning.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.